Hemant Rustagi, independent advisor, now joins in. Morning, Hemant. Thanks for joining in. This is Samina this side. Hemant, what are you making of Bharat 22 ETF? It's a big one after, of course, what we saw with CPSE ETF, which listed in March 2014. This one's a very different story.
Yeah, good morning, Samina. Yes, absolutely. It was very different. It was more broad-based. If you were to really compare that with CPSE ETF, there are only 10 stocks here. We were talking about 22 stocks. I think the interesting part was that there was 3 private sector companies in that. So I think it was a good option for investors to buy a basket of stocks and some very good performing companies and also some companies which are very high yielding. So obviously, we have seen from the response that people really liked the product and invested in it.
Hemant, so what do you recommend? Do you believe that this is an attractive long-term investment opportunity for retail investors to partake in the India growth story?
Well, Samina, the problem is that, when a product is hyped like the way Bharat 22 was, so many investors looking at it as a great opportunity for them. But the fact remains that if you were to really look at these 22 stocks, I'm sure whether you're a mutual fund investor or you're a stock investor, many of these stocks will already be there in your portfolio. So my view has always been that when you buy something like this, look at your existing portfolio and see whether you have these funds, stocks already in your portfolio or not. Okay, by just adding, because if you look at retail investors' point of view, the maximum you could invest was 2 lakh rupees. So if someone has a portfolio of, let's say, 20 lakh, 30 lakhs, it's not going to make much of a difference to you. But nonetheless, I would say it was a good option, a good combination of stocks for investors.
Right. What is the sort of gains one can expect on listing? It's not an IPO, it's an ETF, and I guess that limits the kind of upside or downside that one can see on listing day.
Well, as you rightly said, absolutely, it's very different from listing of a company because there, if it's hugely oversubscribed, there are a lot of investors who are waiting for it to get listed and buy it from the secondary market. Here it's a basket of stocks. So ultimately the underlying asset is a basket of stocks here. So it all depends on how the stocks do on a particular day, that is today. So obviously this listing is going to be very different from the listing of a normal IPO.
Right. Also, Hemant, help me understand this, right? Because at the end of the day, the response has been overwhelming. 32,000 crores has been collected against a target of 8,000 odd crores. And the government finally retained about 14,500 of that. Do you think, this is clearly a liquidity facility for investors?
Yeah, it was, clearly. Eventually, like I said, if from an investor's point of view, what you need to see is what is the potential of the security or the ETF that you're buying. Now, for example, if you look at, the last CPSE, if you look at that performance the last 1 year or so, it has actually underperformed. Okay, even the normal ETFs or even the actively managed large cap funds. So clearly, like I said, there was so much being talked about that. A lot of investors invested in it, thinking that's a great opportunity. It is indeed. I would say that someone who does not own these stocks is a good opportunity for those investors. But I think one should allow it to get listed and see how it performs, and then decide what should be the next step.
Hemant, very lastly, its expense ratio is relatively low, and I'm just looking at the performance of, some of these PSU names that are part of this ETF. They've had a pretty strong run over the last couple of months. So if I had to ask you, irrespective of what the listing is, for a common investor, do you think it's more rational to go after a diversified fund as opposed to picking an ETF like this?
Yeah, you see, if you really want to compare ETF with, actively managed fund, clearly cost is an important factor. But like I mentioned earlier, if you were to look at the performance of the earlier ETF, okay, I would say because you can't really compare this with that because there are only 10 stocks in that. So the investment universe was quite narrow in that sense. But the fact is that if a normal ETF, I'm talking about, ETFs investing in the large cap stocks, have done better than that. Okay, and the actively managed funds have done even much better. So while you have paid higher costs in actively managed funds, and I'm only talking about pure large cap funds, I'm not even talking about multi-cap funds, the fact that despite paying higher costs, the returns are much higher. So I think Indian market, I believe strongly that actively managed funds will continue to do better than ETFs.
Right, thanks for that, Hemant. Thanks for that perspective on what one should do if you're a retail investor looking at a Bharat 22 ETF.